Good morning, and thank you for joining us on Morning Markets from True Potential. Today we'll look back on asset market performance and some of the news stories from markets yesterday. So just looking at asset market performance yesterday and focusing in on the equity market firstly, we did see a slightly weaker backdrop. I suppose that's not to be unexpected at this time, given how equity markets in particular have performed over the course of the year to date, and obviously as we're going through results season where there is a lot of information that market participants are having to take on board, think about what does that mean for share prices, what does it mean for the valuation and therefore the direction of those share prices. So that's one of the things that is clearly in the background. I think also it's worth mentioning that really the dynamics that we've touched on at the start of the year around how the economies reopen, how COVID-19 moves in terms of infection rates, vaccination rates, etc. All of these factors that have been with us throughout the past number of months remain. They are the same, so nothing has really changed, but they do influence sentiment, and that's the important thing at this point in time. I think just briefly I'd also like to comment on some of the language that people do use to describe some of the moves that we've seen. You have to put this in context, and some of the moves that we saw yesterday, just over 1% in the main index in the UK, 2.5% in the US. Some of the words are being used as tumbled, plummeted. I don't really think they're relevant to what we've seen today. It's important to look about it in the context of how the market has evolved. Take a step back from that and think about what the media is trying to do. We don't really see a discussion as markets are generally moving in a positive direction. We only see those words when it's negative. So it's important to keep it all in context. I suppose with that as a backdrop, the shift in sentiment that we did see, it wasn't really surprising to see some of those safer haven areas perform slightly better yesterday. And by that, we saw the dollar strengthen about 0.5% on a trade-weighted basis. But also, we saw Treasury bonds in the US come in slightly further, so yields there come in a couple of basis points, so yield in the 10-year 1.01% as we stand at the moment. I think just touching on currencies, there were some interesting comments from ECB officials talking about the strength of the euro, and the euro did underperform a number of other currencies yesterday. Clearly, they are concerned about currency strength, choking off or mitigating the strength of any recovery that the Eurozone could see, and also dampening down the inflation impact. So that's something to watch, just to observe how they may or may not discuss any action that they might think about taking to limit the strength of the euro. Just then to the US and to the Federal Reserve meeting. We got the usual statement last night and then the press conference that came after that. As expected, no change to interest rates, no change to the asset purchasing program, maintaining that at $120 billion. And basically the comments around it that they need to see substantial further progress being made in the direction of recovery. If we think about what does that mean in Federal Reserve language, it means getting closer to full employment. We know that is a long way off given the unemployment data that we see, and also to see prices on average above 2% for a period of time. Neither of those things look close to occurring, and that suggests that the Fed will likely remain on hold for a considered period of time. I think just the one other statement that was made, really recognising that the pace of economic recovery has slowed a little bit in recent months, an impact of where we are with COVID-19. But clearly, as President Biden has set out, he's very aggressive plans for vaccinations, 100 million people in 100 days. That would go a long way to potentially changing that dynamic and getting us back to a more sustainable recovery. I think also just one other thing on economics to touch on yesterday. We've discussed in the past number of weeks and indeed months, the strength in German manufacturing and how that has really supported the German economy as service sector has been weak. We heard from the German finance minister yesterday and really suggesting that some of the impact of that might start to wane as we go through 2021, and as such the government there revising downwards their expectations for economic growth from 4.4% to just 3%. And just really acknowledging that whilst the vaccination programmes are a clear positive, the pace of recovery has the potential to be slightly slower than they had initially expected. Just one other thing to touch on then today, we've a number of people ask questions around GameStop and the sort of the meteoric rise of that stock in the US, so increasing from $17 at the beginning of the year to close to, I think, $350 at the close yesterday, a rise of nearly 2,000%. So what is GameStop really? It's the equivalent of Blockbuster, where people in the US can go in, hire video games, etc. A business that has been challenged by the move to online, the move to streaming, etc. And that change in business environment has encouraged a number of those funds that can short stock, effectively borrow from others and profit from a fall in the share price to take positions in that name. Now, those positions have been challenged by retail investors, day traders who have really used the share price but used the derivatives market, so used options to drive that share price higher. That is the impact of those that are short realising losses. They need to post additional funds to maintain their position, or ultimately as they suffer increasing losses they have to close out that position. In order to close the position they need to buy the stock, and that exacerbates the situation that we're seeing today. So it's a fascinating story. It's exceptionally newsworthy in terms of what's happening there, and indeed we've seen that spread out into a number of other stocks where there is a very large short seller presence, where there have been challenges there as well. So it's something that I'm really keen to watch. It's something that we haven't really seen in the past. The implications of it, I suppose they're a bit unknown at the moment, but clearly there are real issues. If we think about one fund in the US, it did require a material injection of capital to help it withstand the situation that it's experiencing today. So that is the real challenge. There is a financial cost to some. There's a financial gain to other. I think with rises like that, who knows? But what can we see going forward? It may be that we see that share price come off as well, but only time will tell. Looking to the day ahead then, we've got GDP from the US for the fourth quarter, and we'll get some indication on the labour market as well. Thank you very much for joining us today.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.